Welcome to another episode of Breakaway from the Rat Race. And today I have the pleasure of speaking with Jason Lee. Jason is a highly recognized real estate broker in the multifamily space. He's currently one of the top producing commercial real estate agents in San Diego County. His transactions and insight have even been shared with the San Diego Business Journal and Costar. In the last couple of years, Jason has represented over 75 investors and sold over $150 million worth of real estate in the San Diego County. And not only is Jason a prominent real estate investor, he's also himself very active multifamily investor. He has acquired over 15 properties over the last 12 months, and he's the owner and operator of over $30 million worth of real estate in San Diego County, totaling just over 65 units. Jason, welcome to the show.
Eric, thanks for having me. It's a pleasure.
Yeah, so that's pretty impressive. So tell us more about kind of like the how you got into becoming a real estate broker, a commercial real estate broker. There's a lot of people that they start getting involved in real estate as an agent and all that kind of stuff, and then it kind of ends there. They kind of like they just keep money paying their dues and stuff like that, and they don't really do that many transactions. I heard like there was only like 5% of the real estate agents out there are actually making money. The rest are just contributing for the paying for the office. So tell us more about that. How did people get in? How did you get in that business? Why were you interested in that? And all that.
Yeah, so like you said, there's a very small amount of people that are in commercial real estate that are actually licensed as agents. I think I got lucky how I fell into it. I met the owner of a multifamily brokerage down here in San Diego at a networking event when I was still in school at San Diego State University. And me and him hit it off and had a good conversation and invited me back to his office. And before I was licensed, I started there as an intern and I learned from like the 25 to 30 guys that were there and asked a lot of questions and kind of fell into it, just through talking to the right people, meeting everyone I could. I knew I didn't want to do residential because I didn't want to work weekends and do open houses and, worry about the emotional side of real estate. I'm more of a numbers
Right.
guy and
Right.
commercial real estate's more about the numbers.
Yeah.
So it just fit my personality a lot more.
Yeah. Yeah, that's true. I mean, yeah. When you do residential, you have especially when you do you deal with people that are what's the word? They're planning to live in that house and stuff like that. Yes, definitely. Or they want to sell their home that they have lived in for 10 years. It's definitely a lot more emotional and a lot more, yeah, it's less numbers driven, and they would walk away from a house because they don't like the kitchen counter or
Yeah.
something like that. And I do a lot of single family rentals, as you know, but they're rentals, so it's the same kind of thing too. Like we can really go through these as commercial properties. We just look at the numbers, and it becomes more and more like a financial products. I'm also a very numbers guy, so I actually don't even. I mean, we invest remotely, so we don't even see the property most of the time, except maybe some pictures of renovations and stuff like that. But that's pretty interesting that you decide to jump into that and do it yourself. But still, I mean, you work with 75 investors. So how do you get these 75 investors be able to help them and stuff like that? How are you promoting yourself, and what kind of like services do you offer that may be a little bit different than some other real estate brokers out there?
Yeah, that's a great question. The bio's a little outdated. It's probably somewhere over like 100, a little over 100
Yeah, I
investors now.
figured.
But now, I mean, I think how I grew that base, honestly, was just to be completely honest with you, is just being on the phones and calling owners and seeing who's looking to transact and who's looking to buy, who's looking to sell. And I think just, hearing no a million times and getting a couple of yeses eventually led to some deals in my pocket. And then from there, I got, more listings and, more buyer leads, put myself out there, do a lot of marketing. But in the beginning, I think as a commercial real estate broker, you just gotta just pound the pavement and talk to as many people as you can because no one knows who you are and you have to make relationships. And that's exactly what I had to do.
Yeah. So give us a chance for a kind of like how many calls did you have to do to get these investors?
Yeah, it's probably in the office from like 9 to 8 p.m. and I was probably calling probably 6 or 7 hours a day. And I probably made like 150 calls a day when I was first starting, talked to like 25 to 30 people a day.
Wow, wow. Yeah, I mean, people. The reason why I'm asking is that people think it's easy, right? I mean, they're looking at you and say, "Oh, yeah, look at him. He did all these transactions and stuff like that." And yeah, and they try to go in. So they are interested. They say, "Well, I want to be a commercial real estate broker." It looks pretty easy, but it took you weeks and weeks and weeks of calling, 6, 7 hours a day, all these phone calls, getting a lot of no's, and then eventually you get one yes, and then you start working on that. And so that I want people to know that things are not easy. You have to call, you have to get out there, and as a broker, you have to make things happen. You can't just wait and sit for the phone to ring, basically.
Exactly. Yeah. I mean, I think it was almost 6 months before I closed my first deal. And, before that, I had, no money coming in. So no base salary, all commission, you eat what you kill. So, that first year kills a lot of people. It's definitely a revolving door because not a lot of people can stand that, going in the office for multiple hours and not making any money each day. So
Yeah, yeah, that's
it's
for sure.
tough.
Yeah,
Yeah.
you have to be disciplined, determined, and yeah. And then eventually you started kind of like acquiring your own properties. So tell us about that side of things.
Yeah. I mean, just generally, I'm a very curious guy. So I saw my clients making a ton of money buying these investment properties here in San Diego. And I saw what I was selling it to them for as a buyer. And then I saw what I was listing them for when they sold a couple years later. And, the returns were absolutely insane. Like people were buying, 8 units for 2.5 million, selling them for $4 million 2 years later, with some renovations. But I just think that the most opportunity was definitely in being a principal and buying your own deals. And that's how you build true equity. I think any broker out there should, save their commissions, not spend it, and look to just buy a couple properties and keep growing that. Because that's what's going to pay for your retirement in the end. Not your commissions, because as soon as you stop picking up the phone, money stops coming in. So I think I just understood that at a young age and had some good mentors that were, some of my clients that were buying in the area. And I learned from them on what to look for, and I saved my money, bought my first deal, and the rest is history.
Yeah. Yeah. I mean, this is very true. I mean, I talked to a lot of real estate brokers and even like, people that are a lot of salespeople that make, a lot of, they live on commission, they work on commission, and then sometimes they get like huge amount of commission. And then they have like 2 months 3 months where there's nothing coming through. And then, so they just kind of like live and live off the cash that they made. And I'm a big proponent of say, well, you should invest that money and then start building that passive income so that it's gonna kind of like smooth out these ups and downs. It's gonna smooth out these gaps in income that you might have. And so I think, yeah, you're very smart to kind of start thinking about that very early on.
Yeah, 100%. I mean, you know better than me. Passive income is what it's about. If you, as soon as you stop working and the commissions don't come in, your family could be in trouble. You never know what could happen to the market, right?
Yeah.
Volume has slowed down significantly this year for brokerage compared to last year. I mean, we're still doing deals, but it's not anything like last year. And
Yeah.
there's a lot of lenders, a lot of loan brokers, a lot of residential agents that are hurting right now. So, if maybe some of them save that money and bought some property, they'd be in a better spot.
Yeah, yeah, yeah. So yeah, let's talk about the San Diego market and kind of how it's going. How does it compare to last year on the multifamily side? I don't know if you know anything on the single family side, the single family rentals, especially that I'm interested in. But yeah, so can you tell us a little bit about kind of how the market is doing over there?
Yeah, so I follow both single family, multifamily, office. I follow all the product types just to see what's going on. But single family from last year is down depending on the submarket, anywhere from like 5 to 12%. So prices are down a little bit here in San Diego compared to the crazy ride we had the last 2 years. Multifamily is held very strong. There hasn't been a dip in prices. Because usually when you're in a very supply constrained market like, San Diego or LA, and there's less buyers in the single family home market, a lot of those buyers who can't afford homes anymore because the rising interest rates
Yeah.
will flee to, renting homes or renting apartments. So the rents have stayed very strong. They've actually kept increasing this year a little bit. So the values on multifamily, as you know, are based upon what the rents are. So the cap rates haven't changed. The rents have gone up. So multifamily is still steadily gone up this year. Volume is down. There's a lot less transactions happening right now compared to last year. A lot of people are in that like wait and see mode, seeing where rates go because they've been so volatile. So not a lot of people are making moves, but there are players out there, some institutional guys and private investors who are making moves. But a lot of my clients are definitely have been sitting on the sidelines.
Yeah. So yeah, I mean, so what do you think is going to happen with the interest rate? I know the Fed is increasing the interest rate, but that's not really the big driver on the mortgage rates. I mean, it
Mhm.
has to do with kind of like money supply, the 10-year note, the 10-year treasury and stuff like that. So what I'll tell you what your tell me what your opinion is on the interest rate, the mortgage interest rate for commercial loan and maybe even like residential mortgages. And then I'll kind of like we can talk about that a little bit.
Yeah, for sure. For residential, I mean, I just listen to, people who are, in that business 24/7. And one of my loan brokers I work with here in San Diego, he works really closely with one of the biggest, residential lenders in the country, which is UWM, United
Mhm.
Wholesale Mortgage.
Yeah.
And the CEO thinks that, from what he sees, he thinks that rates will be down in the fours next year. That's just his prediction, but
Yeah.
who knows if he's right, but he thinks rates will go down next year. For commercial interest rates, I ask a lot of questions about this as well to my loan brokers and banks that I work with, like First Republic, Chase Bank, and they also think that rates will stay steady or go down a little bit.
Hmm.
But commercial rates haven't been as high as residential, so they think it'll be pretty steady.
Yeah. I think it's kind of going to be steady at this point. That's kind of my feeling because I think the Fed is going to increasing the rate, but they're also tightening the money supply too. So that means that there's going to be less acquisition on the for the bill, the 10-year T notes. And then that's going to keep the interest rate. So I mean, it has been up the last couple of weeks, and I think it was down like 2 weeks prior to that. So I think it's going to go kind of sideways for a little bit. And also the demand for mortgages has dropped significantly. A lot of mortgage lenders and mortgage brokers, they've also laid off people because of the volume of mortgage has fall off the cliff basically. So for all these reasons, then you have less demand for mortgages, and I think that's going to potentially drive it pushes it down, and then you have other factors that are pushing it up. So I think it's going to be kind of like going sideways for a little bit. That's kind of my feeling. But I don't see a big increase in mortgage rates. So that's the one thing that I don't hear anybody saying that mortgage rates is going to go right up, even though I'm preparing for that. I thought but I want people to be aware that these some of these rates might actually go up, and if they don't, that's fine. But be prepared for them to go up, so that if they go up, you're not caught in a bad situation where your mortgage payments go through the roof, and then you can't afford them anymore.
Agreed. You always got to prepare for the worst, right?
Yeah, exactly. So what do you think in terms of recession? How does that factor into your multifamily kind of investments if we head into a recession and then we have like more layoffs and the unemployment rate starts going up?
Yeah, I mean, that's a great question. I mean, I think it's gonna be different by submarket. I think each city will be hit differently by what happens. I think there will be different percentages of losses or market values. But like for example, if you compare the Arizona market, Phoenix compared to the San Diego market, I mean, or even Las Vegas, I mean, those values over there were so inflated that
Yeah, yeah,
I could definitely see rents going down there significantly, which would lower the property values significantly as well. So I think it depends, how the supply is, how the supply and demand is in each market. But I can't see, most markets being hit too hard if you have good debt and you have, you own property in a good location and you bought it at a good price. But if you overpay the last 12 months and you can barely afford your mortgage payment right now, you could be in trouble for sure.
yeah. Yeah, I think if you're long term, if you have if your debt is a long term debt, and if you're a long term investor, I think you don't have to worry about too much, as long as your mortgage is also fixed for a longer period of time, and it's not going to renew in the next couple of months. So that's going to be good. But I think that if you're a short-term investor, if you're a syndicator and you're counting on reselling that property in the next couple of years, then that could be a pretty bad situation because your loan is a little bit differently structured. Often they have like a 5-year term or a 3-year term loan. And then if the interest rate is going to be up in the next couple of years, then you could be hit with a massive increase in payment. If we end up in a recession and you have high unemployment and the rates start going down, like in Phoenix, definitely I know a lot of syndicators in Phoenix, and I wouldn't want to be in their shoes right now. Because yeah, I mean the supply of houses is going through the roof. And then you have potentially, I just like you said, I think the rent is also going to go down, and and the value of these commercial properties is driven by the net operating income and the gross rent. So yeah, so I think that'd be a pretty tough situation to be in. But your properties, the properties that you own, they're all in the San Diego area, and the market's doing well over there. It's pretty stable.
Yeah, all my units are in San Diego, and yeah, it's been very stable. Nothing crazy yet. We'll see what happens the next couple of years, but as of right now, it's been pretty steady.
Okay, well, that's very good. So tell us about so we talked about kind of like if you want to be a commercial real estate broker, an agent, how to become, to be someone that people go to. But how do you get started? If I'm interested in getting started in multifamily, if one of our listeners want to do that, they really are interested in multifamily. They don't want to do anything residential, let's say. How do they get started? They may not have like millions of dollars to buy that multifamily, but so how should they get started?
Yeah, I mean, the way I got started and the way that I think a lot of people could benefit from hearing this is I think if you buy your first property, if it's a 2 to 4 unit property you start with, which I highly recommend, and you use an FHA loan and you put 5 to 10% down on a property, and it needs a lot of work and there's a lot of upside. So what I mean by upside is you can buy it for $1 million, it'll be worth 1.5 million if you put the work in, and if you put in 100 grand worth of work, you'll build about 400 grand worth of equity minus commissions if you sell it. That's how I grew my portfolio really fast. I bought deals with high leverage. I got, first loans and then a second loan in the back. And I put like 10, 15% down on these smaller properties. And then I created a lot of value, a huge upside. And then a year later, I 1031 exchange them into bigger buildings. So I think my model worked really well to grow my portfolio quickly and didn't raise outside capital to do that. I think
Oh,
if
really?
you
Wow.
if you have a good partner and like for example, I found the deals and my partner had a hard money fund, so like it was a perfect match. Like I found the best deals and he had the best debt. So we kind of had that symbiotic relationship, and we ended up, growing our portfolio that way.
So, okay, so you had a partner that was basically your bank, and then you would go in, kind of like you would find the deal, you would analyze the deal, put and do all the work there, and then he would come up with the funds. Who would manage the projects, the renovation projects? Is it both of you or?
That was mostly me. So yeah,
Yeah.
I managed the renovation projects with the help of our property manager, but I was kind of the asset manager, seeing everything, and he was kind of doing the back end stuff like the accounting and the financials. So
Yeah.
yeah.
Okay. So, hard money lending. Have you thought of raising any private money lending, private money loans?
Um, the private money loans that we've done have been like small, like second trust deeds behind like the first trust deeds behind like the banks that we work with.
Yeah.
Banks that allow second trust deeds or mezzanine debt is, you have your first loan, you have a smaller second loan to get higher leverage for those who
Yeah.
don't know. But Yeah, I mean, we use private money on deals all the time, but not as much anymore because we've kind of went up into the we've built more equity now, so we don't need it as much. But when we're
Yeah.
first getting started, and for anyone who's first getting started, I think you want to have, you know, this is probably, I mean, tread lightly, like don't get super high leverage on a deal because you'll lose your ass if it's on a great deal. So if you're doing these high leverage deals, make sure you're buying a really below market value property where you're building equity day one. Because if you try to buy a property off the market that's renovated and you put, 90% leverage on it, you're probably going to lose. So a lot of my deals were found off market through my relationships and through direct outreach.
Yeah.
So I had access to really good, below market value properties.
Hmm. So can you still find below market value property in markets like San Diego?
Yes, you can. Yep.
Oh, wow.
Yeah. I
I'm
have three.
surprised.
Yeah, I have three in escrow right now. I mean, it's tough, but if the percentages are much lower than like a less competitive market, but you just got to keep trying, and eventually when you find one, it's great. So it's
Yeah.
worth the trouble for sure.
So what's the cap rate right now that for these undervalued property?
Um, so the pro forma cap rate is a 7. So
Oh,
we're buying it for like I mean, the current income is really low, of course. So the current income is like a 3 cap, and then we're gonna help move the tenants somewhere else. And then after we do the renovations and do the work, the cost comes into like a 7 cap, and we can sell it for like a 4 cap. So makes sense.
wow. Oh, wow, that's excellent. And then you are able to so I mean, one of the reasons why I don't invest in California is it's not the landlord friendly state. So I want to be able to easily be able to not renew a lease if I don't want to, and then evict the tenant, not evict, but and then do the renovations and put a new tenant in at market rate. So how do you handle that? Is there anything special you have to do in San Diego to make that happen? Is it difficult?
Yeah, I mean, if you're in a market in California like LA or San Francisco, it's impossible. I would never invest in those cities, but San Diego's a lot more lenient. We do have the rent control law where you can only raise rents. It's AB 1482. You can only raise rents 5% plus CPI every year to a max of 10%. So right now CPI is obviously higher than 5, so the max rent increase per year is 10%.
Yeah.
But if you're able to move that tenant out and you renovate it, you can, market it for whatever rent you want. So that's great. So the only trouble you're gonna have is you got to tread lightly when you're kicking out tenants. So when you're moving them out,
Yeah.
you have to be very kind, friendly, treat them like a human being. Offer to pay for a moving truck, offer to pay for like 2 months rent or even 3 months rent to help them move. Um, so you can't just kind of stick a 60 notice and hope they leave. You gotta
Yeah.
you gotta do a much more of a light dance. There's also another way where you can also, pull permits for major renovations, like a main panel electrical permit or a main sewer line permit, and that can also help you have just cause to remove the tenant. But I learned that the first way works a lot better when you're actually trying to become friends and work with the
Yeah.
tenant to get them out.
Yeah, I mean, we try to do that as well. Even though we go in the landlord-friendly states, I mean, we try to help them. We give them plenty of notice. We especially it's hard to find sometime another apartment to move into another house. And then we help, if they want us to help them pay for the truck or movers and stuff like that. I mean, for in some situation, we do that also. In the end, it's worth it for us to pay. Well, where we invest, like $1,000 goes a long way. So yeah, so that's very good. And then you said that so you do the value add, and basically, so that means that the renovations and all of that. Then you bring your rent to market, and then that really increase the value. So when you have a 7% cap rate with the market value income, and you can sell it at 4%, that really is going to give you a very good profit. And so after that, when you sell that property, you would do a 1031 exchange. So how easy do you do that systematically for everything, or you just yeah, okay.
Yeah, yeah. I've never cashed out on a property. I've always rolled the equity into a bigger deal. So, if you don't know what a 1031 exchange is, it's basically you have 45 days to identify a property you're going to buy, and then you have 180 days to close. And the 1031 exchange is a IRS tax code that basically allows investors to exchange their profits into a like-kind property, and you defer property taxes or capital gains taxes. So, if you were to sell, a property and you had, let's say, $200,000 profit, you'd have to pay, 30 to 40% on that profit. Whereas if you do a 1031 exchange into a like kind property or a bigger asset, um, you can turn that 200 grand and put it into, maybe you sold a house, you can put it into a fourplex and then you have 4 units. So it's a very powerful way to grow your portfolio and grow your unit count.
Yeah, exactly. So this is why I think like real estate investing is such a great investment. You don't have anything else like this where you can actually defer taxes pretty much forever up until you want to have the money out later on. But then you can control how the money gets out. I mean, it's just unbelievable. I mean, you don't have that with stock. As soon as you sell the stock, you pay your capital gains tax. There's no way to kind of like roll it into unless you go maybe opportunity zones, but you have to pay taxes right there and then. So this is very powerful. There are obviously other tax advantages that you can do. Like, are you doing also like bonus depreciation and stuff like that with like the cost segregation?
Yeah, we do.
Yeah. So tell us a little bit about that, kind of like our listeners about how you handle these that cost segregation and what's the advantage of doing it that way.
Yeah, I mean, for easy math, I think if you don't know, there's huge tax benefits to owning real estate. So if you buy a property for $1 million and basically the government has a tax code as well that allows you to depreciate the cost of the building. So if you minus the cost of the building minus the land, that gives you the building value. So let's say the building value is, $750,000. So for multifamily and for single family investments, you can depreciate that $750,000 over 27 and a half years. So if you divide 750 by 27 and a half, that's like,
They can do their own math.
yeah, that's like 27,200.
Yeah,
So you can deduct that from your personal income each year. So it's
yeah,
very powerful.
yeah.
But accelerated depreciation, aka cost segregation, which is what I do, is basically you get with a cost segregation specialist and they allow you to, take that 27 and a half year depreciation and turn into either like, 3 to 10 years. So if you want to be really aggressive, you can do, a couple years, but let's say you do a 10-year schedule. So basically, you can take that $750,000 worth of depreciation and depreciate $75,000 each year.
Mhm.
Now the downside is after that 10 years, you won't have those tax benefits. So I would highly recommend doing a 1031 exchange and buying a new property so you can start that schedule over again. So if you plan on holding that property forever, maybe it's not the best choice, but if you do plan on trading up, you want to maximize those deferrals so that you can get the max amount of tax benefits against your personal income or your other real estate income.
Yeah, yeah, and basically the advantage of that is that the what the cost segregation does. And I'm sorry for putting you on the spot there, Jason,
No, that's fine.
but basically you're breaking up the building instead of this is a building. Now you're saying, well, the building has air conditioning, has appliances, has this, has that. And an air conditioning is not depreciated over 27 and a half years, it's depreciated over a 5 year period. Same thing with appliances and all that kind of stuff. So that cost segregation basically breaks it down, breaks the value of that building into all its different components, and each component is depreciated individually. And then on top of that, when you add the bonus depreciation that was implemented like 2 or 3 years ago or 4 years ago, so that basically now you can depreciate all that air conditioning. You can depreciate that whole air conditioning from day one when you buy the property. So that's a great advantage, to take advantage of that, and that is going to offset your income for that year. And you can actually also spread these depreciation costs. If there's anything left over, they can also offset future years. So this is all perfectly legal. I know it sounds crazy, but this is all perfectly legal. This is all perfectly part of the system. And it's because they want people to invest in real estate. They understand how capital intensive and how difficult it is to invest in real estate. And the government recognizes that and gives some advantages to people that want to do that by giving them these tax advantages. So this is very powerful. On top of that, you have the 1031 exchange. So I was like, it's pretty amazing. So yeah, so this is very good. So any other kind of like suggestions or things that you would want to tell our listeners to say, this, if you want to invest in multifamily, in commercial real estate, these are the things that you need to do. You need to focus on this. You need, maybe if you don't have, if you're not good with money, or if you're not good with this, if you're not good with that, like, how do you partner up, find the right partners and stuff like that. So any kind of other advice you can give them?
Yeah, I mean, I think the most important advice I can give is that real estate is all about the deal. The deal is the trophy. If you have the deal, you can figure out everything else out. So I think in order to get a hold of these deals, you have to, if you're first getting started, you have to meet the people who have control of the deals. So you want to have great broker agent relationships. You want to meet people that are, maybe wholesaling properties, or people that are just know a lot of owners, such as property managers, etc. Just getting your name out there and trying to tell people, as many people as you can, what you're looking for is step one, in my opinion, if you're looking to get started in real estate. Of course, you got to have your finances down, but even if you have no money and you don't have the money to put down on a property, if you have, an experienced partner or someone that in your network who owns a lot of real estate, and they're open to partnering with you if you have a good deal, I mean, that's a great way to get started, because you're providing value by finding a good deal. While they have the money, they can just sit on their couch and watch TV while you bring them all the deals, and you'll both make money. But of course, you're bringing all the hustle and the time, and that person's bringing all the money. So it's just a great relationship you can start to grow your portfolio. It's the best way to get going.
Yeah, exactly. So I think, I always say, like, once finding the deal is a skill in itself, that you can find the deal. Sometimes just being the wholesaler on the commercial side too, like finding the deal and say, this deal works great. And then, a commercial real estate investor, or you call Jason and say, hey, do you want to invest this with me? I know that if someone comes with me with a commercial real estate deal, I'm going to cut them into the deal. I'm going to either like give them a fee, a referral fee, or I'm going to cut them as part of the deal, as part of the GP, so that they can experience that. And if they want to put more effort into the deal, then they can also do that. So there's always all kinds of ways, but the key is finding that deals and then working that deals. And then when that opens a lot of doors, then you have a lot of things to talk about to other investors and lenders.
Exactly. Well said.
So, Jason, so thank you very much for your time. So I know you're very, so if a lot of people out there want to invest in commercial real estate and multifamily in San Diego, how would they connect with you?
Yeah, I mean, easiest ways to connect with me on my socials. My Facebook is just my first and last name, Jason Lee. And then my Instagram, YouTube, everything else is, and Twitter is Jason Joseph Lee, my full name. So if you want to shoot me a DM on social media, that's the easiest way. I can give you some free help.
Excellent. Well, thank you very much. Thank you, Jason. Thank you for your time, and talk to you later.
Thanks, Eric.
Thank you for listening to Break Away from the Rat Race with your host, Eric Martel. If you want to share your story and experience with our listeners, please message us on Facebook at Break Away from the Rat Race. Also, please subscribe to our YouTube channel and our podcast on iTunes.